All right, y'all, back to work. Boy, fantastic job today. It sounds like a lot of you guys made some pretty good money in those bear traps we talked about in last night's video. Now, we got CPI coming tomorrow, and the way things are setting up right now, it looks like breakouts are probably where the money is made on Wednesday morning. Now, breakouts, you can't trust them all, right? Some breakouts you can trade, other breakouts you should fade, some breakouts you can trust, and some breakouts you can't. So tonight's video, we'll talk about which breakouts we can trust and trade those breakouts, and which breakouts are probably traps we should trade against them. So I have a lot we're going to cover in one of the most important videos of the week this week. By the time we're done tonight, you'll have an easy roadmap to make some money on CPI breakouts on Wednesday morning. So charts are ready. Enough of the intro. As always, thanks so much for tuning in and supporting our YouTube channel. Let's go find some more winning trades on Wednesday morning. S&P SPYs already, as you can see. NASDAQ triple Qs are already. I have three very simple but very important clues on these charts in front of me right now that are telling me where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly charts. It's quite easy to see, right? We're bullish overall on the S&P SPY. We're bullish overall here, the NASDAQ, the triple Qs. So one of three big clues is we're bullish on the higher time frame. I like to use this as a bit of a directional bias, keep us focused on the right side of the market. Now, a second big clue is over on the calendar. There are three things on my mind for the calendar tomorrow. First things first is one of the biggest news reports of the week. That CPI report is going to give us some volatility tonight. That's why I say breakouts are probably where the money is made tomorrow. Now, CPI, we have to expect some fireworks, right? So tonight we'll talk about some extreme cases of breakouts back and forth. Make sure you guys are ready for some big volatility around CPI tomorrow. A second thing in my mind for tomorrow is we get JPOW tomorrow. Now, usually we don't care too much about the second day of his testimony, but tomorrow he's in front of the House Oversight Committee with all the Doge stuff going out, the waste, fraud, and abuse of the Treasury we've seen lately. I would imagine there'll be a very entertaining testimony tomorrow morning. That's something I'm watching tomorrow morning as well. And also to a third thing for tomorrow is tariffs. We heard from Trump earlier on in the week announcing new 25% tariffs on aluminum and steel. We are watching that closely this week. It will be a very big known unknown, and we'll know more tomorrow and the rest of the week. But CPI tomorrow, though, right? Be ready for some fireworks. I'll make sure you guys are ready for how to make money on those fireworks as we go deeper here into this video. Okay, so where do we leave off here? First clue was bullish overall direction bias. Second clue was the CPI expecting fireworks tomorrow. Third clue is over now on the tick charts. Tick charts, keep in mind, we don't trade time charts. Tick charts make pattern recognition a whole lot easier. And by the way, if you're watching for the first time right now, that is a 7,000 tick chart. All the time frames there in the upper left-hand corner. And in my opinion, the only indicator you need to make lots of money in trading, consistent profits in trading, is the 21 EMA. Now, one final clue, and it probably is the most important clue out of all of them, this big bull run up into a trading range. Now, why is that a big clue? Because ranges, they love to rotate. We rotate down, up, and back up. It seems like right now these buyers are trying to complete their rotation. We call these pendulum swings. We measure the amount below, we measure the amount above. So knowing that we're overall bullish on the hourly time frame and expecting some fireworks around the CPI tomorrow, I have three different types of breakout trades. This is a bull range, so we can trade a bull breakout. Later on in this video, though, I want to talk about what might be my favorite trade for tomorrow, which is a bearish move in a bullish range. You do not want to chase and trade a counter trend breakout in a bullish range. These are breakouts that you fade. I have three types of fade the breakouts, bear traps down there. We'll cover that a bit later on in this video. So if you like making money, I would definitely recommend you stick around all the way to the end. So again, we trade bullish breakouts in a bullish range, but how do we do it? Here are 3 types of breakout patterns I look for in situations like these. Now, first of all, the way in which you know when you can trust a breakout is all about how price reacts to the 21 EMA. In my trade room, we always say separation equals strength. Separation. When we break out, if we start seeing shallow pullbacks that don't pull back all the way to the moving average, that is the separation I'm talking about. So if I can get a breakout going higher here, and again, trying to complete that rotation going higher, I'm looking for a higher high in price, a shallow pullback, and my first entry look here is what we call a technical bear trap. It's right below that low. I want that higher high in price. I want that strong green candle closing back above that 21 EMA. Now, one of the most important things about range breakouts is the breakout leg is the measuring leg. So the size of the breakout leg, we then project that up. Guys, if you want to make more money, hold your winners longer. Knowing how to calculate the breakout leg, measure leg is an easy way to have confidence to hold on to your winners. Once we break out of this, we then look for a breakout pullback. That prior trading range is begging now for a breakout pullback. Don't believe me? Go back and watch last night's video. If you watched last night, it's exactly what happened last night. Bull range up, right? Breakout, pull back. We want something similar here tomorrow. Now, when I say breakout pullback, I always think about a 2-legged pullback. So 1 leg, 2 leg. Think about a measured move, right? A measured move, A, B, C, D. If we're lucky, that will line up right around those prior highs, and that will give me an area to look for the entry. Once I get that 2-legged pullback into support, now look for a bear trap. What I mean by that is wait for this market to pull back. This is a horrible spot to be selling. All that bull momentum at a key area support. Yeah, this is the last place you want to sell, which means it's a great place for a bear trap. Let those bears try once. Let them try twice. Why twice? Because now I know where your pain is. Think about where you are in trouble. Think about where your stop would be if you were caught short right there. Buy right into that pain, buy right into that stop, because bears, when they're trapped short, they buy their way out of their position. Now, the market wants to go back up and take out that high. On the way back to that high, want to make more money? Add to your winners. How do you do it? With this add-on. It's that same pattern we saw over here. It's that shallow pullback. I can't emphasize enough how important it is to get that shallow pullback. Separation equals strength. I want that higher high in price. I want to get right below that low. Perfect, perfect. So 1 of 3 trades I'm watching for tomorrow is a breakout pullback. It's a bear trap entry. Again, think about that breakout leg, measured move, a 2-legged pullback with a bear trap off the top of that range into an add-on trade. Targets, of course, now back to retest that high. Another breakout pattern that we love is a pop and grind breakout. Pop and grind breakouts are very, very cool. It'll pop up and begin to grind going higher. Now, these are really, really important clues because anytime a market pops, separates, and grinds like this, these create a lot of momentum. They're like a freight train. They're very difficult to stop. So knowing this, I could be a little bit more aggressive on the entry. For example, I'm going to mark a trend line off the highs. I'm going to bring that trend line down off those big lows. What that does now is it gives me a channel to work with. Look left now. Find a prior swing, and this is where the money is made. This is one of the most consistent winners we see every week in our trade room. Again, it's a pop-up. It grinds higher. The grinding motion makes a freight train. We get more aggressive. First test is the best test off the low of that channel. This could be a trap entry below prior swings. This could be a 2 try bear trap entry below 21 EMA. It could be a pullback combination. Now, very, very important. Pay attention. The size of that pop leg, the size of that breakout leg is a measuring leg. Anchor that there. That is where your final target is. I love pop and grind channels. Now, I have one more breakout trade we'll talk about here. One of my favorites. Before we do that, though, and finish this up here, let's slow down for a second because I know most of you guys and gals watching right now, you know these patterns already. You're making money with these already, right? But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. What the heck are failures and add-ons? Don't you worry. I teach this entire roadmap. In fact, I have a ton of examples of bear traps, add-on patterns, pop and grinds. I have so much more I want to share with you in addition to these videos here right now. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I share in that short video series. The best part is it is 110% free for you. And also too, guys, keep in mind too, I'm going to put all the important links you'll need to learn this strategy. I'll put everything you need in the description of the YouTube video. Start first with the free video course. Most people start making money on their own just with the knowledge I share in that short video series. So start there first. If you're on Twitter or X, I post a ton of charts and videos and mindset stuff on Twitter X during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the entire strategy, hopefully earn a lot more because of it, are linked up for the description of the YouTube video. Okay, that's where we want to go to learn more about these entry patterns. Now, where did we leave off? We talked about the breakout pullback. We talked about the pop and grind move. And again, in a moment, I will talk about that fade the breakout, right? Because if you break out lower, we don't want to chase that and trade that. We fade those breakouts. I'm going to cover that in just a moment. Let's finish up though on the S&P chart though with what my favorite breakout trade of all time. That is a breakout into a trading range. Now, why would this be my favorite out of all time? Well, because ranges are magnets. When we break out and go sideways, that anchors the market higher. Now remember, if that range is a magnet, what is the previous range? The previous range now is a breakout pullback. Now these can be very, very lucrative because the amount we go below the range can then project back above the range. Okay, let's break this down. How do we time the entries on these? The exact same way, really. Once we see that trading range form, we wait for a pullback, a breakout. Remember, it's a bull range. So we don't trade those breakouts, we fade those breakouts. We trade against those breakouts. And to do that, it's always gonna be that bear trap, that 1 try, that 2 try. I'm not a big fan of picking bottoms on this. I would rather wait for the bears to get suckered in there, let those bears wrap that rope around their neck, and then buy right into those stop losses. Now, this is where this gets fun because now the amount below, the amount above, we know where the market wants to go. For me personally, that gives me a ton of confidence now. And now as we go higher, what was it again? It was that separation off the moving average, that higher high in price. You see, guys, these entry patterns are very consistent over and over again. We just find different ways to apply them in range environments, in two-legged pullback environments, in pop and grind environments. Once you learn these scenarios, I'll tell you, trading gets a whole lot easier, a lot more confidence, a lot more consistency. So again, one of my favorite breakouts is a breakout into a new trading range tomorrow morning. Remember, use the new range as a magnet. The previous range is for a breakout pullback. Let me saw if you watched last night's video 24 hours ago. And again, we don't blindly buy and sell. We wait for a breakout, bear trap. I call these failure patterns in that free video course. I mentioned earlier, an add-on, right? A trap entry to add on. Leave that runner, right? Leave that runner. If there's one scenario where you have to get better at letting your trades run, it's a range because ranges love to rotate. Boy, I'm getting excited just talking about this stuff here tonight. Okay, I got more I want to cover here though. If we go lower here right now, if we go lower, it's a bull range right now. We want to fade those breakouts going lower. Let's grab the NASDAQ here next. NASDAQ's getting a bit lonely over here. I see you, NQ. I'm coming to you, buddy. Okay, on the NASDAQ right now, again, always starting first, on the hourly chart. The hourly gives us the overall directional bias, directional filter. We know right now we're pretty bullish overall here. That's one big clue on the NASDAQ. Before I dive into tick charts though and talk entries in the NASDAQ, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing, because YouTube rewards me every time you like, share, and subscribe to my channel. I know we're all busy people these days. I appreciate you guys spending a few minutes of me here every evening on these videos. So thank you so much for the likes, subscribes, and all the ongoing support. Now, roll our sleeves up and get our hands dirty here now on the NASDAQ tick chart. Drilling down the tick charts here right now, and you'll see right away here, this is a 4,000 tick chart, a little bit different time frame there on the NASDAQ. The NASDAQ's not as liquid as the S&P. What do you see right now? But yeah, besides that beautiful breakout pullback we talked about in last night's video, how perfect was that channel, the top of that trading range? Again, this is why I love ranges, right? It was a range yesterday into a new range. That range is the magnet. The previous range is the breakout pullback. Again, all the stuff we teach on these videos came all together in a beautiful symphony this morning in our trade room. Now, what do you see? Yeah, we didn't get that big run higher. We went lower highs, higher lows. This is a triangle range. Now, triangle ranges are very similar to rectangles, but they're a bit different. The key to a triangle range is the edges, right? The edges. Whenever we see a triangle range, it's all about the edges. I want to avoid the messy middle, right? Avoid the messy middle, right? So avoid the middle of that range. And of course, right, we're a bull range right now. So we mentioned earlier on the S&P, a breakout, we can trade breakouts in a bull range, right? The same three trades I mentioned earlier on the S&P, the two-legged pullback, the pop and grind, the break in a trading range, right? So same game plan we mentioned earlier on the S&P, that will definitely apply here on the NASDAQ. One of my favorite trades though for tomorrow would be, again, we got CPI coming out tomorrow morning, right? So if we can go lower here, remember it's a bull range right now in an overall bullish hourly chart time frame. So this is the last place. You don't want to trade this breakout. You want to fade this breakout. Now, how do we do that? Well, as we break out, my focus really is getting in below these lows, right? Those edges, right? The edges of triangles are usually where the money is. So if I get a breakout going lower, again, right now it's trying to rotate higher, but tomorrow we get CPI at 8:30 Eastern time. We may easily go up and get crushed back down again. Now, I'm not a big fan of picking bottoms down there, especially during a big news event like CPI. What I'd rather do is wait for price to pull back to that 21 EMA, let these bears dig their own grave, and then buy right into their stops. And remember, this is a range. Ranges love to rotate. So we now know the market now rotates down, up, down, and where does it want to go? Wants to rotate back up again. Once you know that information, now we look for the add-on. What's the add-on? Remember, it's shallow pullback, right? Higher high in price. Separation equals strength. We add to our winners with that, with the add-on entry, just like that. Again, think about getting underneath these prior swings. Horrible spot to be a seller. Great spot for 1, 2. Squeeze those stops, buy right into those stop losses. And if we're lucky, we get that add-on entry as it rolls back higher. Now, one challenge is that sometimes we don't get that bear trap down there, right? Sometimes we don't. Sometimes what happens is we get a nice strong run down, but there's so many buyers down here, it just whoop and runs right back up again. When that happens, what I'll do is start looking for a new bull channel. These are very easy, but they require some discipline, because if you're anything like me, that voice in your head is going to be screaming at you to get in, get in, get in. Do not chase after these moves. Your patience is rewarded by finding that new bull channel. And as always, look left, find a prior swing, and you want that buy right off. That first test is the best test. The most important thing is I want to get in underneath some of these prior swings if all I get is that V bottom off of that low. That is a second way to fade that breakout going lower here. One more here. We oftentimes will get a strong breakout down. We oftentimes will get a nice easy 1, Two, trapping those bears will run back up into that trading range. But for whatever reason, the strength of that move down is simply so strong, we see another leg going lower. Now remember, I always use a quick first target, so 1-to-1 first target, the size of the signal, the size of the first target. You'll learn that more in our free video classes. At that point, stop gets moved up to our point of entry. I go for a quick first target, get rid of all the risk. That way, if it does roll back over on me, it's no harm done, right? We don't get the big runner, but at least we're out with a profit on this. Now, when I go back and retest that low here, and oftentimes, guys, the breakout leg is the measuring leg, so keep an eye on that somewhere down around that low right there. This is a great place to take another bite at the apple. Is this a good place to sell? No, we're overall bullish on the hourly. It takes a lot more than a one big leg going lower to cause the hourly chart to turn bearish overall. This is the last place you want to sell, because anybody who sells up here, they're taking their profit where? Around that low, right? Sellers up here become buyers down here. This is the last place you want to sell. Great place, trap in some rookies and squeeze some stops. Bear trap, 1 and 2. Get that price squeezing higher. And remember, anytime we see a retest trade, these are oftentimes the most lucrative trades we see in our trade room, because everybody gets trapped off that double bottom. Easy place squeeze stops as it runs higher. Look for that separation off the moving average, that higher high in price. And as always, add to your winners as it tries to rotate back up again. Do not lose sight of the bigger picture. It's a range, so to rotate back up. So leave those runners. Leave those runners. Okay, now let's talk for a moment about CPI tomorrow, right? Because again, we may see some fireworks tomorrow morning in our trade room. We know how to trade if it goes higher, right? If we see a nice big run going higher with CPI, we look to buy the two-legged pullback, right? Breakout pullback, right? Or it breaks higher into a trading range. That game plan is pretty straightforward, right? We know that from earlier on in the video. If we see a very strong run down off CPI tomorrow, what's going to happen is I do want to buy down here, because again, it's a range above us, and ranges are magnets. But the problem is, if I see a really strong run down, all of that momentum is going to want to pull back, retest that low before we go back up into that range up overhead. So knowing that is the concern, if we see a very strong run down in the wake of the CPI report tomorrow, I'm going to make a small adjustment on the bear trap entry. It will still be bears trying once, bears trying twice, but now I want to get in underneath that low. Whatever you do, if we see a really sharp move down after CPI tomorrow, again, I still want to buy down here, but I can be more careful now. I want to buy as low as I can. I do not want to buy as we're going higher. Why? Because as we go higher now, there's more likely now we hold one of the edges of that range and go back to retest the low. Make sense? I want to make sure that I am in the green on that trade, getting my 1-to-1 first target, removing all that risk. And who knows, right? Maybe I'm being too cautious. It may keep going without me there, or keep going with that rotation higher. But at least in that scenario, though, I protected myself by getting in as low as I possibly can. That way, if it does keep going, right? If it does keep going higher, and we do start seeing that separation, good. Higher high, separation, I can add on to my winner like always, right? But if we don't, right? If it rolls higher, I want to be in the green on that, getting rid of that risk. If it rolls back down again, now that double bottom retest in an overall bull market, I can be a lot more aggressive on the retest. The retest trade can be a lot more aggressive on these, because now I know where the bottom is, right? The first breakout down, I don't always know where the bottom is yet, right? Especially after a big CPI report. So I want to be very careful, again, in a very extreme move going lower here, to buy underneath that prior swing. Once those bears come in and short the pullback on that, and they take their profit of the low here, I can be a lot more aggressive. Same pattern, basically, 1, 2, but now I don't need to buy as low anymore. I can buy into those stops, run higher, and add more on the entries, right, on the shallow pullback right there. So rinse and repeat there on the retest trade. A failure or a bear trap, a failure pattern, like I teach in the free video course, into an add-on, right? A bear trap add-on as we go higher here. All right, guys, now we're ready for whatever this CPI report throws us tomorrow morning. That's my game plan and some variations for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room. Every morning, 8 o'clock Eastern time. Guys, the easiest way to make money in these markets is to learn and trade along every morning at the opening bell. Once again, I'm going to put all the important links you'll need to learn this strategy in the description of the YouTube video. Start first with the free video classes. Enjoy all the trade examples I share in that short video series. Then come join me in my trade room and we'll do it all together. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.